This is Power Trading Radio Live. Power Trading Radio Live, fueled by Online Trading Academy. For more information on the show, visit us online at powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. This is John O'Donnell. As you can see from those of you watching our YouTube streaming session, Merlin's not with us today. He's on an early break for the holidays. He will be back after the holidays. But my guest today, I think you're going to enjoy very much. My guest today has been on Power Trading Radio 2 or 3 times, and he's always been a very popular guest with our audience. We're going to talk today with Jeff Deist. He's the managing director, leading administrator there at the Mises Institute in Auburn, Alabama. He also was formerly chief of staff for Ron Paul, who most of you know took on for the fight for real money, sound money back in the day. We'll maybe talk a little bit about what that experience was like. But Jeff, welcome to our show.
Well, thank you so much, John. Good to hear from you.
On the Mises Institute's website, mises.org, dated December 10th, your Human Action podcast that you all produce and you act as narrator for, you had a show entitled Why Gold Still Matters with a gold dealer by the name of Keith Weiner. And I was really, really impressed with that whole experience. And so much so that I reached out to you to see if we can't take that topic on here at the Online Trading Academy's Power Trading Radio audience. Jeff, why does gold still matter?
Well, it's interesting. I guess he's a gold dealer of sorts. That's not his primary business, but yes, we always think that people who are pushing gold are self-interested, and I suppose that's an easy explanation. But for me, anyway, I think it matters for a variety of reasons. First of all, as Keith explained in that podcast, gold has been used as money for at least 2,000 to 3,000 years.
Yep.
So we've got all of that history and track record behind us. Now, does that mean it'll always be money? No, but that's an important fact. The second important fact from my perspective is that gold has never gone to zero. There's never been a point in human history at which gold had no value, monetary or otherwise, to people. So that's, again, no indication of what will guaranteed happen in the future, but it's never gone to zero. There's never been a point where, let's say, a grandfather dies with a bunch of gold and people are disappointed versus, there are lots of instances where grandfather died with a bunch of worthless stock certificates or something like that. So, gold has a very enduring role in the history of money in the world. And even today, despite their rhetoric, central bankers themselves are buying more of it for their central bank holdings or exchanging more of their other currencies for gold than at any time in many, many decades. As a matter of fact, since the crash of '08, central banks have been net purchasers of gold, not sellers of it. So if gold is this relic that doesn't really matter anymore, it's odd to me that central banks are increasing their holdings of it. Now, does that mean that gold has some magic property that we should all go out and buy a bunch, that it's going to go to $5,000 an ounce or something like that? No, I don't think so. But nonetheless, the fact that it's so enduring, that it holds value over centuries and centuries, I think is really important. And I think all of us who worry about government, who think government is out of control, that government's too big, it's too powerful, it spends too much, it borrows too much, it makes too many phony promises about future entitlement payments, that sort of thing. I think all of us should be fans of gold because it's something that governments can't just conjure up. They can't just pull it out of the ground willy-nilly. And so I really love gold as kind of a counter-narrative, as something that is the canary in the coal mine, as something that keeps governments honest, and really a beautiful and historical form of money. And I like money that doesn't have a government printing it. I like money that doesn't have counterparty risk, money that's money, as opposed to money that's an IOU. And of course, as we know, that's what we've got with the dollar.
Absolutely. TJ, let's pull up this image that I have. I don't know if you can see this, Jeff. You probably can't. You're probably not near a computer terminal, but for all of you that go to powertradingradio.com's YouTube site, I have a picture up right now of a big iceberg. So if you can think of an iceberg, Jeff, and about 5% of the mass of the iceberg is above the waterline, very visible to anybody that might be approaching the iceberg. But below the iceberg, if you look at the total mass of the total iceberg, at least 95% of the total mass is below the waterline. That's very, very difficult to see, and in some cases extending deep enough, it's indistinguishable. And my point is this, in showing an iceberg, I think the general public view of money is that of an iceberg, and they don't really, I like to say that the characteristics of money, the demand for money, the need for money, the characteristics of a medium of exchange, a store of value, a unit of account capability that gave gold this enduring history of, like you said, maybe at least 2,500 years. I know ancient gold coins in ancient Lydia, which is now modern Turkey, became visible around 500 BC. So let's assume we go back about 2,500 years. That history of gold is below the waterline. And this non-understanding of what money means to voluntary exchange, medium of exchange, the division of knowledge, the division of labor is so critically important. But all of that seems to be lurking below the waterline, not only to the general public, but I'd like you to address the same disillusionment about the history and the importance of money that prevails that you and Ron Paul ran into in Washington, D.C. among our legislators.
Well, people think money is some sort of magic tool of government or central banks, and that by just manipulating it and fine-tuning things like interest rates and the money supply, that we can make the world more prosperous. The problem is that more money in society does not mean more goods or services in society. It just means more money. So money in and of itself, unless it's gold or some kind of commodity, doesn't have value other than its value for purchasing things. So what we ought to worry about in society is how productive we are, how wealthy we are in terms of goods and services. Any government or central bank or treasury can crank out more money. I mean, that's no great trick. And if that worked, then the former Rhodesia, Zimbabwe, would be rich today, and it isn't. If that worked, every central bank in the world would simply create a lot more money. Now, it kind of works for America, at least for now, because we are the world's reserve currency, and the whole world uses dollars to settle international payments, most of the time to purchase oil, etc. So there's a lot of demand across the world to have U.S. dollars. So as much of a critic as I am of our monetary policy, by contrast, in many ways, the dollar is the least dirty shirt in the laundry. And the machinations of other central banks around the world are even worse, like the ECB and China and the Bank of Japan. I think they are, in many ways, have exhibited more crazed monetary policy than the Fed has. So the dollar continues to prevail and it continues to work, but the question is there ever a point where it wouldn't work? And gold is sort of, again, the canary in the coal mine. When a government or a central bank gets too out of control, gold tends to rise rapidly as priced in terms of against the currency that central bank is issuing. So gold is unchanging, it's unyielding, it just sort of sits there. Almost all the gold that's ever been produced in human history is still in existence. The stock-to-flow ratio, which Seyfuddin Amos talks about in the Bitcoin Standard book, is very, very high. And so, the idea that gold is a relic that doesn't matter, that we don't have to pay attention to, I think is wrong. And I think it's something that it's a tale that central bankers want us to believe, but it isn't true. And I think everyone who listens to your show ought to take a little better look at gold and at least understand why central banks hold more of it, and they hold more of it as a hedge because regardless of what they say, they're recognizing by their actions that there's more uncertainty and risk out there than they'd like us to believe. And so I'd rather watch what they do than what they say.
Yes. The term that we use around here, I don't know if you're familiar with the acronym VUCA, V-U-C-A, stands
VUCA.
for VUCA. It's an acronym that's maybe the hottest buzzword in the Harvard Business School today, that businesses are in a condition of perpetual VUCA, standing for volatility, uncertainty, complexity, and ambiguity. And I could say that same thing about our whole monetary system. Volatility, complexity, uncertainty, ambiguity. The brand of money can wear the VUCA brand exceedingly well in today's world. And if you think about the future, the probability is more VUCA, not less VUCA. But if you take the time to study the whole history of civilization and the role of money to facilitate voluntary exchange, the world has been in a constant evolving state of VUCA, going all the way back to the origins of civilization, if you really think about it. Money is one of the few, gold as money is one of the few standards that's withheld the test of time. I can't think of any other store of value that's withheld the test of time like that.
No, and of course, I'm up to my elbows in a lot of various crypto communities, and I talk to a lot of Bitcoin people all day long, and there's raging controversy within Bitcoin communities about whether gold is a relic that no longer makes sense, and that Bitcoin has exceeded it in terms of portability and instantaneous transfer, and you don't have to hold it physically and this and that. So, I'm not so convinced that the two mediums cannot coexist, and that they aren't in fact complementary. I'm a fan of Bitcoin. I'm an owner of Bitcoin, but I'm absolutely a fan of gold and an owner of gold because I think that money can take more than one form potentially, and I don't think Bitcoin has proven itself as money yet. And again, I think that as long as you hold gold, in however large or small a percentage you choose, for your own comfort level, you are in effect hedging, and it's just money. It's not an investment. I don't begrudge the fact that it just sits there. I don't begrudge the fact that it doesn't pay me a yield or a dividend or interest. And I don't begrudge the fact that it has a physical component, which means it needs to reside somewhere. I view that as actual upsides of it. And so, I always know that at the bottom of all of this, I own some gold as a hedge, and I'm quite comfortable with that. And what does that mean in the long term? What is the scenario under which gold might indeed go to 5,000, or you might actually need the gold that's in your safety deposit box or under your mattress? Well, I'm just not sure, and that's okay. I think it's okay to say that, to say we don't know. And it's precisely because we don't know. I don't like futurists. I don't like people who claim to know. I think Mises disabused us of the idea that there's an arc to history. We have to create history every day when we wake up. So the fact that we don't know, I think, is an argument for gold, not against it. So I hope that crypto people are cognizant of this. And as for the people, they like to deride us as gold bugs, people who continue to believe in gold year after year. Well, I call them Fed bugs. This is a great term that Judy Shelton has coined. I believe she coined it to describe people who have untoward faith in the Fed, or who think that central bankers have all the answers and that they're always going to do what's right. And history shows that they don't have all the answers, and so until they do, gold persists.
Well, in your conversations with the crypto community, it would seem the next logical integration step for the crypto and the gold movement would be to create some form of blockchain that has a fixed amount of gold units in it, and that one can buy tokens or in that particular entity, and you would have what I would call the equivalent of digital gold. And as long as you had a credible warehouse and insurance relationship, would that not be the next logical step for the crypto crowd to embrace some of these properties of gold?
Well, I think the answer is yes. And let's not forget that even before crypto and blockchain, so-called, and blockchain is just software. Blockchain's not magic. It's just distributed software that lots of different people can see and validate. That's all it is. There's nothing. It's just a ledger. Sometimes I think blockchains become a buzzword for some sort of magic crypt keys or something. But even before blockchain and crypto, there were gold-backed debit cards. I think Peter Schiff's organization had one, for example, gold money.
Right.
So the concept's been around, but the whole key here is that we don't fall into the same trap that we fell into with the dollar. And the dollar used to represent a piece of paper that was redeemable for actual money, and actual money being gold. The paper itself wasn't money. The paper was a claim to trade for real money. And over time, the claims themselves started trading around, and the gold, people forgot about the gold, and then it became a lot easier to create a lot more pieces of paper than to pull a bunch of new ounces of gold out of the ground. So, I worry about any kind of intermediary, any kind of centralized entity in the Bitcoin sphere or in the gold sphere, because I don't want to have any kind of central repository where there is, whether that's government or not, where there is, that temptation to start issuing more electronic, credit to gold than the underlying gold would support. Where we've got a fiat system. So, blockchain gives us some transparency to prevent against that, and I do like the idea of a gold-backed digital currency, because I'm not entirely sold on the idea that Bitcoin or cryptos satisfy Mises's regression theorem as an explanation for how something became money. But that might be neither here nor there. And it's not up to John O'Donnell, it's not up to Jeff Deist to decide what money is at the end of the day. The market's going to decide whether Bitcoin is money. The market's going to decide whether gold continues to be money. And the only reason you and I can't use that, let's say, amongst each other for payment is that it becomes a barter transaction because the federal government says so, because the federal government says you got to pay your taxes in dollars, and that giving someone gold for goods or services is a taxable barter event rather than just a sale. But gold is still money. Gold is still money, regardless of what governments try to do to thwart that. Whether Bitcoin is money is yet to be proven. I hope it becomes widely accepted, but so far, no.
Have you heard the story about the M-Pesa unit being used as money in African countries?
Yes.
I think that's a phenomenal development, and it is, to your point, that there was such distrust in the fiat money created by the central banks of those countries that they called upon the telephone company to develop basically an electronic ledger to keep track of debits and credits in units of cellular telephone time. So if you came into my coffee shop and I wanted to buy a cup of coffee, there would be a quote-unquote price quoted on the wall, perhaps in M-Pesa units, and they would swipe a little magic wand over my electronic smartphone, and minutes would be debited from my account at the local telephone company. And because of the utility of the minutes to deliver digital wireless communication, they have value. And so my currency would be convertible into something that had great utility for that merchant, and I would receive the cup of coffee, and they would get almost an immediate credit to their digital account. And I think it's a perfect example of the market choosing what medium of exchange they trust, they have confidence in, to facilitate trade, because when, like we see going on in Zimbabwe today, and obviously Venezuela is going through a situation with complete currency destruction, which has terrible social consequences. The market needs to have the opportunity. So Hayek's paper comes to thought that we don't need the Fed to monopolize money. The market is fully capable of inventing mediums of exchange that have credibility that should be available for use, don't you think?
Yeah, I think that what you described in Africa is so interesting, that the market finds a way around. Now, it's still imperfect, because you may want that cup of coffee, but how much I want some phone usage credit may vary. I might prefer to have something else. So you get into some of the inefficiencies there of barter, where it's not as perfect as if you had a good currency, but it's still much better, obviously, than the local currency.
Sure.
More stable, and so that's really the key. I mean, money is all about trust at the end of the day, and so. Where a business, for example, has a vested interest in its own business reputation. Take some sort of giant like Amazon. I mean, imagine if they were issuing some sort of Amazon credits that began to act almost like money. People were trading them, and of course on Amazon you can buy just about anything you want. And it's such a vast retail site or conglomeration of sites and private sellers. Imagine if someone like Amazon was producing Amazon bucks, and then by virtue of their own business reputation, if they suddenly produced a bunch more real quickly, and as a result, all the retailers on Amazon started quickly raise their prices in Amazon bucks, they would suffer injury to their reputation. I mean, there's lots of technologies and companies out there now that it sheerly is a matter of acting as a trust agent and issuing currency. Could probably do a better job than the U.S. federal government in tandem with the Federal Reserve Bank. I mean, at this point, since 2008, they've shown that they'll do whatever it takes. I mean, they'll take any kind of measure to prevent some sort of stock market collapse. So what's the question now is not whether central banks would just go away and let us have denationalized money like Hayek argued. They're not going to do that. The question now is whether technology will simply outpace them, and they won't be able to do anything about it. So that's the question that fascinates me.
Yes, and of course Facebook is running into this right now with their investigation on their proposed Libra cryptocurrency to issue. And you can see that the powers that be, as represented in that cross-examination, are scared to death. I mean, there's no question in my mind that their monopoly, their functional monopoly, it basically is at risk. And creative people will do workarounds. Right?
Yeah, that was really something watching those hearings. I mean, they were just aghast.
They were petrified. And it was obvious to me in their questioning, they had no clue what this cryptocurrency really represented. They were just clueless, absolutely clueless.
Right, and really, what it really represents is a threat to their monopoly. I mean, that's first and foremost. And the idea that members of Congress understand the U.S. banking system or gold or the dollar or crypto or something, it just isn't true. I mean, these people, I'm not saying that they're necessarily dumb, but I'm saying that a lot of them got to Congress in ways that don't reflect some sort of expertise in markets or economics or anything like that. As a matter of fact, when Dr. Paul, you mentioned him earlier, he used to sit on the banking committee, which now has a fancier term, the Financial Services Committee. One time after one of his endless backs and forths with Alan Greenspan back in the day before Bernanke, a member of the banking committee, who's still in Congress, by the way, I won't reveal the name, but a member of the banking committee came up to him after the hearing and said, "Ron," and this is in the 2000s, and said, "Ron, do you mean that we're not on a gold standard anymore?" And this member of Congress was on the banking committee. This wasn't, so it really is the blind leading the blind. And the beauty in this, John, is that sometimes things just outpace the state. I mean, Uber just rolls into some town, and before the regulators can sort of react, or the taxi monopolies can react, boom, you've got Uber, it's popular, And yes, in theory, they could shut it down, but there would be some outcry. And that's kind of what's happened with Bitcoin, is in just 10 years' time, it rolled out, it was adopted by more and more people, and now, a decade after Satoshi's original paper, you still have legislators who don't even know what it is. So that's where our hope lies, is not that people who believe strongly in the state are going to suddenly change their views. It's that they're going to be passed by. That's our hope.
Well, I hear you. Well, Jeff, how is the best way for our viewers and listeners to listen to your interview that you had with Mr. Weiner? How do you suggest the most efficient way they can get a hold of your podcast, Why Gold Still Matters? Because I think I want to encourage all of our listeners to listen to this podcast, because Jeff and Mr. Weiner went into some very, very important points in this podcast. And if you really want to understand a little bit better why gold still matters, you need to listen to this podcast. Jeff, what would be the most efficient way for our membership to get to that?
Well, if you're a podcast person, you can use iTunes. Look for the Human Action Podcast on iTunes.
Okay.
You can find it on YouTube. You can find it on Stitcher. You can go to our website and find the Human Action Podcast and just download an MP3. But really recommend Stitcher, SoundCloud, iTunes, all of those apps. You'll find the Human Action Podcast. And it was really an interesting time. I think you'll enjoy it. Oh,
I know you will enjoy it. I've been working this topic for probably 40 years, and being a card-carrying active champion and a gold bug myself, I can't recommend high enough that everybody listen and embrace this principle of gold as money, and why it's so important and why it still matters. That even though the state across the world have attempted to take us off the gold standard, that doesn't mean that you and I individually at our own scale can't be on some kind of gold standard if we desire. And that includes, for instance, taking at your weekly, annual income and denominated it in grams of gold. I mean, there's a great website out there called pricedingold.com where they take virtually hundreds of situations, and they price everything in grams of gold or ounces of gold if it's appropriate. And you can see the price charts look remarkably different when you price something in fixed value like gold versus a fiat currency. It gives you a totally different perspective of value. Jeff, thank you very much for being with us. My guest today has been Jeff Deist. He's the Grand Poobah there at the Mises Institute. That's Mises.org. It's my go-to site for everything in economics. I encourage you to become a member of the Mises Institute, because the resources there that are available and at your fingertips virtually for free are incredible. Jeff, it's my understanding, correct me if I'm wrong, but the Mises Institute is maybe the most heavily trafficked economics website in the world today, isn't it?
It's one of them, certainly. Yeah, absolutely it is.
Well, you have a tremendous cast of fellows there that contribute their wit and wisdom to the whole experience, and I just want to encourage all of our members to discover, if this is your first time listener to Power Trading Radio, and I'm asked all the time in the talks that I give in our classes, what's my go-to site, and I constantly am referring people to Mises.org. Murray Rothbard changed my life, and I am confident if you take the time to investigate all the information that's there versus all the Keynesian boulder dash that's floating around the world today, you too will find it a great resource. So thank you very much, Jeff.
Thanks a million, John.
Ladies and gentlemen, that's it. Gold still matters, and you need to make sure that you take a look and get it more engaged in your thoughts, not only about investing, but about just basic capital preservation. You do have a choice. There's a place for fiat currencies in our day-to-day activities, but there's also a case for gold and other precious metals like silver in our day-to-day life as well. And for instance, I'm like Jeff, I don't look at gold necessarily as an investment. I look at gold as a gold standard that I can use as a denominator to measure rate of change. But I want to measure the rate of change with a denominator that is affixed, and that is a gram of gold is a gram of gold. 1,000 years ago, a gram of gold was a gram of gold, and 1,000 years from tomorrow, a gram of gold will be a gram of gold. You can't say that about a fiat currency unit when you have a central bank that's dedicated on inflating the currency supply, and a group of politicians across the world that are dedicated in making political promises they can't keep, printing up a bunch of money, borrowing money that they pay back in some fiat currency that gets diluted over time. If you want to measure something, I want you to think about this. What would our world be like if 60 minutes were not an hour? What if in country A, 60 minutes were defined as being, or an hour is defined as being 30 minutes? What would we do if an hour was defined as only maybe 45 minutes in Japan? Well, but an hour was defined as 60 minutes in America. I mean, think about the chaos that would be in our commercial society. What if we lived in a world where a foot wasn't 12 inches? What if a foot varied in distance? For instance, this week a foot is 12 inches, but next week a foot's only going to be 11 inches. You would have chaos in the measurement system, which are so important to so many products and services that we deliver to satisfy our consumption needs. So, ladies and gentlemen, look into this topic. There's another great book on this topic. It's called What Has Government Done to Our Money? It was written by Dr. Murray Rothbard, who was one of the founding intellectuals for the Mises Institute. I encourage you to take a look into it. I've enjoyed being with you today. We have another guest tomorrow. His name is Dr. Mark Thornton, and we're going to take up a totally different topic. Although he happens to be a fellow at the Mises Institute, we're going to talk about a book that he wrote called The Skyscraper Curse. Peace. I'm out of here.